This one is one of the most highly anticipated of the last year. Just over a week ago, we were very strongly pricing in a strong hold from the Federal Reserve Bank at this meeting, one day before it's coming out. That pricing has now risen to a 40% chance that they may increase rates by 25 basis points. Kevin Warsh is leading the way for his second meeting. The day after the Fed, we've got core PCE coming in. That inflation data hasn't really taken into account the surge that we've seen over the last few months. Hello and welcome to ATFX's Federal Open Markets Committee preview. We're going to throw in a little bit of the PCE price index as well. Today we're going to be looking at what's coming up in what is one of the most highly anticipated Fed meetings of the year and probably of the last few years. Also have a quick look at that PCE index data which is coming out after the meeting and a few trading opportunities that look pretty ripe in the market. Just a short week, maybe just over a week ago, we were very strongly pricing in a strong hold from the Federal Reserve Bank at this meeting. That pricing has now risen to a 40% chance that they may increase rates by 25 basis points. That's been strongly reflected in the market by the dollar strengthening and, more importantly, US yields moving back up to multi-year highs. Lots going on in the market at the moment. What we cannot ignore is the geopolitical situation that we've got in the Middle East. We've seen a huge spike in crude oil prices over the last week or so. Over the last couple of days, we've seen them come right back down with what appears to be strong chances of peace. That's what the market's pricing in from the oil perspective. When oil came back down, yes, we've seen a little bit of a retreat in yields. We've seen the dollar hold up nowhere near to the extent of the moves that we've seen in oil. Brent was over 8%, I think 9% down last night on news that the US and Iran are talking again. So the reason for that is because the Federal Reserve Bank now are priced in with this 40% chance of a hike. If it does come in and hikes, and it would be a surprise still, although much less of a surprise now than it was even a week ago, we would see the dollar fly high, would see US yields fly higher. Now, there's a few other little imparted bits of information that we have got to throw in, which have changed from recent months as well. Of course, one of the first ones is we've now got Kevin Warsh in charge of the Fed, not Jerome Powell. He has been less forward-coming, should we say, with his forward guidance on how the Fed's go. And this could be a strong show of strength if he comes out knowing that they're going to have to hike rates at some point and the market is firmly pricing in a rate hike by September. If he goes now earlier than expected, but not a total surprise, it does show a bit of strength from his leadership. And obviously the other main consideration we've got is over the past few weeks, we've seen this huge escalation in the conflict in the Middle East. Strait of Hormuz closing. So that's really driven oil and energy prices higher. On top of that, you've got Houthi attacks on Saudi Arabia's shipping in the Red Sea, which was the workaround to get past the Strait of Hormuz for Saudi Arabian tankers. That's increased concerns geographically as well. So plenty going on. If the Fed takes that into consideration, they could go for this surprise hike. We could see the dollar accelerate, and there's some great trading opportunities out there as well. On top of that, the day after the Fed, we've got core PCE coming in. That's expected to show a 0.2% month-on-month increase, down from what I would call its more usual 0.3, showing that easing in inflation. But we now know that inflation data hasn't really taken into account the surge that we've seen over the last few months. So it's past the Fed meeting. It's unlikely to have too much of an effect, but it could see more volatility on Thursday after what should be a very, very lively final session on Wednesday. So plenty going on. The other side of things of what we got, if they do hold rates, how hawkish they're going to be. The market's expecting to be very hawkish. We could get a complete surprise the other way, and then we're going to wait for data. That could be seen as dovish, and we see the dollar fall off and yields with them. So plenty of trading opportunities coming up. We're going to go and have a look at some of the charts now. We'll start off with gold, then we'll move on to dollar yen, and then have a quick look at euro. But good trading opportunities in all three of those products coming up in the next couple of days. Bear with me and we'll skip over to the charts. And here's our gold daily chart, which you'll be very familiar with if you've been tuning into our regular videos. If you haven't, do hit that subscribe button. We'll keep you up to date with everything that's going on. So as you can see here, gold still on its way down. It has been moving strongly in line with the US dollar ever since, and kind of surprisingly, ever since the start of the conflict in the Middle East. So we are expecting it to move in line with the dollar on the back of the Fed rather than on any geopolitical safe haven trades that we might have. So I'll bring this chart in a little bit closer and we can have a little look at some of the tighter levels that we've got, and we've got good levels on both sides. So trading opportunities high for gold at the moment. We're sitting in the middle of this, what has been quite a tight range really over the last few weeks, and it has been moving in line with the dollar, although we did get a couple of off days recently where geopolitical concerns did see it move higher. But at the moment, dollar strength has led it to move back down off these levels. Resistance now coming in. Trendline resistance 41.16, the recent high 41.65. Trendline support now down just underneath that 4,000 level, 3986. Next level we've probably got is that low down there, 3942. I expect one of these to go on the back of the Fed move. Now, if we get that surprise hike, expect dollars to be bought, gold to go down. It should challenge this trendline support very quickly. Then the recent low, which is the annual low, then it opens the way up all the way for a move back down here to this much longer support trend line down here, just shy of 3,700. And as you can see, that goes back a long way. The chart's taken a while to update, all the way back, connecting these lows all the way back to 31st of December 2024. So good, strong support line coming in there just under 3,700. That would be the target on either a hawkish Fed or a surprise Fed hike. Moving on now, we're going to have a quick look at dollar yen. Now, here's the dollar yen chart, and this is a real pain trade or real potential pain trade for the Bank of Japan. They've not been happy with yen weakness. This is all yen weakness, dollar going all the way up. Now, it's not as weak against some of the crosses as it is against the dollar, but we are here. This is the recent high, 163.98. That is an over 40-year high dollar yen. If we see a surprise, and as I said, it's not going to be too much of a surprise, 40% priced in at the moment, hike from the Fed, expect the dollar to take off. It should break through these highs, and it opens the way for moves much, much higher. It could even open the way in the medium term for a move up to 170. There's no, as you can see from my chart, there's no top, old school parlance. There's a bid, but no lid. There's not really any technical levels up here. So the only technical level really is that high. You have to go back years, as I said, 40 years to find the next levels in there. You're looking at Fibonacci extractions. It gets very messy. If we get this hike, it could go high. It could go very fast. We could then see the Bank of Japan expect volatility in the yen. They will be hoping for a slightly more dovish Federal Reserve. That could take us back down. It will probably provide good buying opportunities in the current environment. Support now around about 162.75. Moving on till tomorrow, about 163, only 70 points away. It would take a real dovish swing, and we're not expecting that from the Fed to see a breakdown here. So great trading opportunity in dollar yen. Expect volatility and manage your trades accordingly. Over now to have a quick look at euro, and we'll sum things up. So this is the daily euro chart. We're having a look, and we have got a break recently down to the downside of the trendline support that was coming in. It wasn't too bad. We've still got these lows to target here, 113.24. So we'll just adjust that line there. We're right on it at the moment. This will be the target that we'll be looking for on the Fed low, 113.24. If we get a surprise hike, that will break, and it will break quickly. It then opens the way for moves all the way down, probably to target the next key site level, which is 110. Previous low back here, 12th of May 25, 110.64. This could be a very big mover for the euro. Conversely, of course, slightly more dovish, a little bit more hesitancy from the Fed, would pull back from those September hike expectations, although I'm not expecting that side of things to occur. Dollar selling, initial resistance 114.19, secondary levels up there at these highs 114.82, and then we're back up here to around 115.75. So plenty of trading opportunities in the euro. Overall, expectation is that we're either going to see this surprise hike, or they're certainly going to lock in that September hike for us and the market. That forward guidance is key if we don't get the hike. If we get the surprise hike, expect to see the dollar fly, expect to see us off to the races and cracking trading opportunities. As always, thanks for tuning in. As I said before, subscribe to the channel if you haven't. But thanks for tuning in, looking into us. Anything you need from ATFX, please do let us know. Thank you.